Good afternoon, everyone. A lot of traders are coming in, so we're going to start in about 30 seconds. Okay, let's get started. And good afternoon, everyone. I really appreciate your giving me this time to show you what I think you're going to um, see is a really awesome trading system. We trade it every morning. I trade it from 9:30 in the morning until usually about 11:30. And let me get started with the presentation. Um, Just to remind you, we're at rightlinetrading.com. Our email information is info@rightlinetrading.com. Our phone is 786-713-5276. Quickly, the disclaimer that Right Line Trading takes no responsibility for any participation by visitors of subscribers when the futures or forex markets, nor for any profits or losses that may be incurred. Our presentation is for educational purposes only. We are not certified financial planners or advisors, and we suggest that you consult a broker or CTA before making any trades. Now, just a little bit about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson College in Philadelphia, where I published close to 15 peer-reviewed articles in first-tier journals. And I've been in the financial markets for over 20 years. Right Line Trading is the product of over a decade of analysis of price action, market structure, and indicator algorithms. And what we base our software on is mathematical modeling. And we consider each individual financial market a closed system. And that closed system, how it behaves and how it moves, is governed by certain forces, and those forces are considered to be independent variables. We determine what those independent variables are, we place them in a multivariable equation, and that's how we are able to determine the future movement of price in any market. All of our indicators are leading indicators. None of them are lagging indicators. And it's one of the fastest growing trading systems on NinjaTrader. Now, our Uni-Renko trading system is really different than anything that you've seen in the past. And I think that you will agree with me when I'm done with this presentation. It gives you precise, exact, software-generated entries that work. This morning, we killed the markets. And it's used by many funded top-step traders. I'm going to show you our entries. When I'm done, I'm going to show you the live markets. And just excuse me 1 second. I'm sorry. I'm sorry. That was my son. Okay. Now, why is the system so good? And the reason is because it was created, as I had mentioned, via the use of mathematical modeling techniques. And these are computer-driven algorithms. Essentially, you're going to see how each market is interrelated, and it really is linked in a sort of neural net. And via the use of these computer-driven algorithms, we really do determine how price is going to move out into the future. Now, this is a science that was utilized to create software generated to predict the future movement of price in any financial market and on any time frame. And these are the same models that are used to create software on all the big tech companies like Google, Facebook. They all use mathematical modeling, and these are all computer-driven algorithmic software programs. Now, it trades the futures market, the Forex market, and the stock market. All indicators have forward-looking ability, and you're going to see that they lead price. They don't lag price. And with an incredible degree of precision, they tell you where price is going. They don't care where price has been. And that's the whole purpose of the software, to predict the future movement of price. I mean, in general, stochastic, MACD, although you're going to see the way we use a few of them, simply tell you where price has been. They have no future predictive value. They do not predict where price is going to move out into the future. Now, Fibonacci does not, Elliott wave does not. You're going to see how our indicators do, and it's going to make sense to you. Now, for a long time, I traded range bars. And what I like about range bars is that you're going to see, I have another slide, is that you can see price action really well. You can see an engulfing candle, you can see a dark cloud cover, you can see a doji, you can see a piercing candle. By looking at range bars, you get a good idea of who's in control of the market, the bulls or bears at any given moment, and that's what trading is all about. But we've switched to Uni-Renko bars. The thing that they have in common is that they're both time and tick independent. The only thing that's required for a new candle to be created is price movement in the financial market that they're used to track. Now, this is the move, and here's the same move on a Uni-Renko. You can see how smooth it is. Now, Uni-Renko is made to hide a lot of price action. Now, Renko bars have no wicks. Uni-Renko bars have wicks, and those wicks are very, very helpful. And you're going to see how we use them to tell us when to get into a continuation trade. Now, Uni-Renko looks great in a trending market, and you can pick up a big move. What most lecturers or what you see in most webinars is they'll only show you a trending market. You're going to see how in a chop market, our indicators keep you out of the trade. And that's really the key when you trade Uni-Renko. You really need very powerful indicators to get you into a trend, but to keep you out of chop. Now, just to quickly review, here are the weaknesses of Uni-Renko bars. They obliterate price action. They don't tell you from candle to candle who's in control of the market, the bulls or the bears. You cannot evaluate Japanese candlestick patterns. And for many, many years, I really believed that this had great predictive value, and I still think it does. But everything is a trade-off. Like, I like to know if there's an engulfing candle or a dark cloud cover or a piercing candle or a doji. You cannot discern a rising and falling triangle or channels. All of this is obliterated by Uni-Renko bars. And they require very powerful leading indicators to signal an entry if you're going to trade profitably. Now, their strength is they do filter out an enormous amount of noise. And if you have those kind of powerful leading indicators, they can put you into a trade and keep you in it and you can ride that trade for a real long period of time and really rack up profit. Now, the thing about Uni-Renko also is you have to have optimized inputs for each individual markets, because that's what creates superior trading opportunities. The inputs for the NASDAQ cannot be the same inputs that you use for crude oil or what you use for the E-mini S&P 500. Each input is individually optimized per market, and that's really important when you're using Uni-Renko bars. And obviously that's based on the average true range or the volatility of the instrument that you're trading. Now, I'm going to give you an example of two full system trade entries. These are just JPEGs. We're not going to move to the actual software, which I have open already in the background. Now, here, this may look complex and complicated, but it's actually very simple. And here's a long trade signal. And I'm not going to go over what all of these mean right now. So I'm going to take them. I'm going to take the system apart, and I'm going to show it to you signal by signal. But this is a 15-point over a 15-point move that the system triggered an entry with the triangle and kept you in for the entire move for 15 3/4 points. Now, these are the kind of JPEGs anyone can show you. What really is important is what you see on live charts, and that's what we're going to move to at the end, towards the end of this talk. And here's another trade. Again, it's a continuation trade. That's another type of entry, and up the trade goes. These dots are really, really innovative. We call the X and the dots, and you'll see what they represent. They're really precise and help get you into winning trades and keep you in the trades. You're not going to get these dots when you're in a chop market, and this is crude oil. Now, let's talk first about the 3-line indicator. And this is one of the core indicators that we use. Line 1 represents momentum. Line 2 is stochastic, and line 3 is order flow. Now, what makes our analysis of momentum and stochastic and order flow of the forward-looking parameters? Why does this create a signal that allows us to look out into the future and see where price is going to go? Now, first, let me talk quickly about order flow. There's a lot of ways to analyze order flow. For us, order flow looks at the market delta value of each candle. A lot of people do it differently, but I believe that this has the most predictive value. Now, you can see this up candle. It's a little blurred. I apologize for that. It has a positive delta of 29.85, which means there's an overabundance of aggressive buyers versus aggressive sellers, and that creates this candle moving to the upside. Now, here is a down candle, but it also has a positive delta of 222. There's also an overabundance of buyers. But for technical reasons, all of those buy orders were absorbed and the candle still closed down. Remember, this shows you market depth. It analyzes how many traders are on the buy side and how many traders are on the sell side. And in general, it gives you a very, very accurate assessment of whether the candle is going to close up or down. But that's only true 66 2/3% of the time, or one standard deviations of data worth of market delta data. So the number doesn't tell you the direction of the candle. This is what makes the analysis of market delta so difficult, and why, well, I'm going to show you in a second. Now, here's order flow assessment. Now you can see clearly that this is an up candle. Any candle with a lower bottom shadow or lower wick at the bottom is a candle that closes to the upside. Here's the high of the candle, here's the low of the candle, here's the open, here's the close. If it has a wick at the bottom, it closes up. The question to you is the delta of this candle minus 673 or positive 673? And the answer is you can't know. So if the delta doesn't always predict the direction that the candle is going to close, then what value does it have? Well, it really does have significant value if you use it correctly, and I'll show you how it's done. Now, here's a series of candles, all with their delta above it. So if you look at the delta of the candles of your trading chart, and you use simply an absolute value of the delta printing out below it, it has in no way is it going to be able to predict for you what's going to happen on the next candle. And all you care about is what's going to happen on the right edge. Is the next candle going to be up? Is the next candle going to be down? And the market delta, as it's being used here, is not going to give you that information. So what we do is we take the delta of the two higher Uni-Renko charts. Now, we simply use a multiple of the inputs, increase them one time, we double them, then we triple them for the two higher Uni-Renko time frames. And when we get to the Uni-Renko chart, I'll show you it's very, very easy to do. We take the delta value and we put it in a 15-period moving average. It smooths the data. And remember, almost 70% of the data is accurate in terms of predicting the direction of the candle. So we create two moving averages on the two higher multiple Uni-Renko charts. So we look at the delta of each candle on the two higher multiple, 2-time and 3-time Uni-Renko charts. We place each of these values into a 15-period simple moving average. When both 15-period SMAs are sloping up, the bulls are firmly in control of the market. And believe me, you're going to see that you cannot trade against the slope of these two 15-period SMAs when they align on the two higher time frames. When both 15-period SMAs are sloping down, the bears are firmly in control, and the order flow line is going to be red. When the 15-period SMAs are not in agreement, it's yellow, and that almost always defines a chop market, where you're not going to get a trading entry. It's going to keep you safe. So here's an example. This is simply one of the three lines on the three-line indicator. Now, I want you to notice something carefully, and you're going to see it live. This order flow line turns green before the market turns up. So once you see it turn green, you know that you're very likely to have the bulls grab control of the market and push it up. The same thing here. This line turns red before the market begins to fall. It's leading price. And the most important thing to also remember, this is the same thing that happens with all three assessments of the three line. They're not looking at anything, any data generated by price on your trading chart. Price rises because this line is green. This line is not green because price is rising. And you're very used to seeing a MACD crossing over to the upside simply because price rises. Stochastic rising because price rises. This is data that's being analyzed off the two higher Uni-Renko multiples, longer time frames, and this is predicting that price on your trading chart is going to head up. If you try to counter trend trade against these lines, you're going to have a tremendously high likelihood of getting stopped out. And here's another example, and I'm going to show it to you on a live chart. Here's price rising. You don't take any counter trend trade into a green order flow line. You continue to look for a pullback and continuation long. Pullback and continuation long every time. Order flow does lead the way, and you must always trade in its direction. If you're wondering why, if you're trading, too many of your trades are getting stopped out, it may be because you're not respecting order flow. And here's a last example. Now it's green here, you have nothing to trade. If you perchance had got a trade entry here, you wouldn't take it. Here, you're going to get it falls. Here, you have nothing to trade. And here, you get your long trade, always in the direction of order flow. And here is where chop gives you no alignment at all. And I used to put arrows here, and we used to use a crosshair, but you don't get any alignment here. Actually, you do get alignment here for a long trade, but this kind of chop action is where you just stand clear of the market. And then right here is where you have your long trade. Now, momentum assessment utilizes the slope of the MACD. It does it a little bit differently than most people use MACD. And again, it's only taken off of this MACD of the two higher Uni-Renko multiple charts, or the longer term time frame charts. They are going to lead price on your trading chart. When the slope, we don't care, well, we do care about the signal line. We don't care about the MACD slope crossover of the signal line. All we care about is whether or not the MACD line is accelerating away from the signal line. When it is, momentum is positive. When the MACD is accelerating towards the signal line, then momentum is negative. That's all that matters. The MACD crossover is irrelevant. Now we look at the slope of the momentum. Now we used to use Heikin-Ashi momentum, and you can use an oscillator for momentum, but I believe that the MACD does the best job of assessing momentum. And we look at the two higher multiple Uni-Renko charts, the longer term time frames, when both momentum lines are accelerating away from the signal line. That second line, the momentum line, turns green. And when both momentum lines are accelerating towards the signal line, that should be a line, not a like, sorry about that, then they're red. When the momentum lines are not in agreement, it's yellow, and that's when you stand aside. So now we have two independent variables, two forces that are creating pressure on price on our trading chart to determine where it's going to go out into the future, and we need both of them to align in order to take a trade. So order flow and momentum must be in alignment in order for us to trade. As we add indicators, we add confirmation of the trade. There's a smaller and smaller opportunity to get knocked out of a trade and chop, and a greater opportunity when we take a trade entry with everything aligned, it's going to work. And you can see now we have order flow and momentum, and we need them both either red or both green. And here's your short trade. They both turn red first. Price drops. They both turn green first, and price rises. Here's another example. Here's chop, where order flow and momentum don't align. And here's a trend. Now the trend is created by the two higher time frames and creates this movement in price on your trading chart. Again, right here, the move up, the move down, and the move up. And here's just another example, that when they stay green, you can stay in this trade for a long period of time. You don't get charts like this very often, but when you do, you can really leverage these metrics and not bail on the trade. And one of the goals we have is when you get a trade like this, you want to bilk it for as much money as you can because you don't get them often. And here's chop again. No trades. And here we have nice alignment. Now here's stochastic. It's assessed the same way off the two higher Uni-Renko multiple charts, giving you a longer term time frame. We do it a little bit differently. When the stochastic line is above the 80 line, the stochastic analysis will always be green. When stochastic is below the 20 line, that line is always going to be red. We believe that anytime stochastic is above 80, the bulls are firmly in control. It doesn't matter whether the stochastic line is above or below the signal line. So we want to stay in the trade. When it's below the 20 line, it also means that the bears are firmly in control, and we want to stay short and not get knocked out of the trade because of any stochastic crossover of the signal line below the 20 line. Between the 20 and the 80 line, the color of the stochastic line is determined by whether or not the stochastic line is above the signal line or the stochastic line is below the signal line. Now, this also signals divergence. And I have some examples on the chart. When you get divergence, it's going to turn the stochastic line, it's going to change it to a neutral color or reverse its color. So it's actually been more of a problem because stochastic divergence almost always gets run over. And it's kept us out of some trades recently based on a divergence signal, and where I've stepped aside because the stochastic line, we want all red lines or all green lines, and the stochastic line doesn't work for us. So we may remove that divergence signal. So when both stochastic lines are overbought, that stochastic line is green. When both stochastic lines are oversold, it's red. And when both stochastic lines are above the signal line, it's green. When both stochastic lines are below the signal line, it's red. And when the stochastic lines are not in agreement, the line's yellow. And here's how it looks. And now it's getting more complex. It's getting harder to interpret and harder to read. Because now you have to have all three lines red or all three lines green. So with all three lines in place, the assessment becomes a bit confusing looking at momentum, stochastic, and order flow. So what we do to make it simple is we project the results of the three line directly onto the candle, making the assessment easy. So here's what I do. You can create a halo on the candle. And when the halo is blue, and you can make this any thickness you want or any color you want for an up move. This is the data you want for long. Now here's a down candle. Here's an up. These are all up. The black is where there's no alignment. So you just take the data directly off the candle, and you don't have to look at the three line. With the yellow halo, the three line is aligned down. With the blue halo, it's aligned up. And the black halo, the three line has no alignment at all. So now You can see here, this is a down 3 line in an up candle. Remember, I told you it leads price, and it's leading price here. The next short candle is your entry. Here, you're not going to be able to take this long. This is a clear-cut downtrend. You wait for the 3 line to turn first, and in you go short. You get an up candle with a down 3 line. It rolls, and down you go. So the 3 line always keeps you in the correct direction and is always going to lead price. When you see an up candle with a down 3 line, the likelihood, if the next candle is short, continuing to move down is extremely high. This is what we want to see. Retracements up, ending in a down 3 line, and then a roll to the downside and a continuation to the short side. Now, since the workspace should be as clean as possible, and we don't look at the 3 line, simply the candle halo, we don't want our eyes to be distracted. So what we do is we make the 3 line transparent, and it disappears from the chart. So now, the only thing you have to see are the candle halos. It's giving you all the data that, or the 3 line indicator, the multi-time frame assessment of order flow, stochastic, and momentum that's required for you to enter a trade, a really low risk, high reward trade. Here's an entry, here's an entry, and there's a short entry. And you don't have the 3 line here anymore. It's gone. Now here's an entry. Here's a long entry. You have no entry here. No 3 line. And even though the market fell, it's a high risk trade when you enter off the right edge. You want to have a great degree of certainty that price is going to fall, and you don't have it here. Here there's no entry, there's no 3 line, and even though price rises, you can't be certain that it will. So you don't take the trade. Here you've got the 3 line, and you've got the move to the downside, and the predictive value of this falling is exceedingly high. So you're not looking to get every move. You're looking to avoid chop, and when you take a trade, you're looking for a very low risk, high reward winner. And I've asked 1 million day traders, what is the main goal of trading? I mean, what do you look for? And most of them say it's to take a winner. And that's not the right answer. The right answer is to avoid taking a loser. You will always get winners. The real goal is to stay out of the market when the market's in chop. And remember, it chops 70 to 80% of the time. And to stay out of the market during that period of chop is what really makes you a professional, profitable trader, because you're always going to get these. You just can't let them get eaten up in chop. Now, here's where we get real novel, and we look at the fact that markets are interlinked. Now, for the E-mini S&P 500, we evaluate the alignment and direction of the multi-time frame trend on the NASDAQ and the Russell 2000 index. And we use the 2 higher Uni-Renko multiple charts to do that. Now, if you're going to take a long trade on the E-mini, you're going to see that if the multi-time frame trend of the NASDAQ and the Russell are both in the same direction that you're trading the E-mini, the likelihood of getting a winner on the E-mini is astronomically higher than if you're trying to trade in the opposite direction of these 2 markets. They link with a correlation coefficient close to 9, which means that the E-mini, the NASDAQ, and the Russell move in the same direction about 85 to 90% of the time. So we want to take trades in the same direction. This is where we use not just multiple time frames, but we use multiple markets to get into a trade. Now, these are the dots. This is our dot system. The darker the dot on the red side, the stronger the multi-time frame trend. The darker the green of the dot, the stronger the more powerful the uptrend is. It's a real complex calculation that I don't have time to go over, but it's very, very powerful. Now, we have two sets of dots. I'm just going to show you one. And then I'm going to show you them both on the live chart. You can see that as the market moves up, the E-mini, the Russell and the NASDAQ are now moving up with you. Now, when you look at these two pullback candles, remember, we want to avoid trading in chop. You're never going to take a short E-mini trade when the NASDAQ and the Russell are aligned to the upside. Now, here's a lighter dot, which shows you that the trend weakens a little bit, and then you get the continuation up. Now, you can't take these initial trades short because the NASDAQ and the Russell are still heading long. So there's no counter trend trade initially, and now there's no dots at all. And I always like to trade with the dots. Here's another trade. Now, they don't kick in till later here. Usually they kick in a lot earlier, but you can see we have two sets of dots. And what they do is they validate this entry. We call this a continuation entry. It's not the beginning of the trend. It's after a pullback and a roll back to the downside. This allows you, one, to make sure you don't take a counter trend trade because the NASDAQ and the Russell are still moving against you. And when you get the short candle, down you go for a great trade. So when you keep your trades on the E-mini in the same direction as the multi-time frame assessment of the NASDAQ and the Russell, you are going to increase the precision with which you trade, and your win percentage is really going to skyrocket. Now, I bet you've never looked at a multi-time frame analysis of the NASDAQ and Russell when you trade the E-mini, but it is incredibly powerful. Now, here's just one more. Here's an entry and a dot validation. Here's an entry. Now, this is a system-generated entry. I'll show you how you get these in a minute. And this is a stronger, darker dot, and up you go. And here there are no dots, and they also help define chop. So when you have no dots, there's no NASDAQ, Russell trend. They don't align. The E-mini is likely to chop. And if we had the 3 line here, you're likely going to see that order flow, stochastic, and momentum also don't align. So we're looking at multiple forces, either on multiple higher time frames or on multiple differing markets that correlate in direction with the one you're trading. Again, onto the short side, there's no long trade because of the dot. But when you get the short signal that's computer generated, that's software generated, down you go because the NASDAQ and Russell are heading down. Again, the up candle, no way. Down candle, you take. It's not a big move, but it's going to just get you to a first target. And then you have no move to the upside with a dot. So it's going to limit the trades you take. That's what happens when you trade with specificity. But it's going to increase the percentage of trades that the percentage of traders you take that are winners. Now, there's no entry signal and no dots. Now you see that this is an oscillator signal. It's a system-generated short. Can't take it. It's censored by the dot. The long trade, up you go. Now, in order to increase the success of a trade, we broke the dot system up to include 2 time frames. So now we have 2 sets of dots. We call them both dots, whether they're dots or whether they're X's. We just call it the dot system. Now, this is a faster moving average on the Russell and NASDAQ. That's the X's. You see, they come in quickly. The dots are the slower assessment of the trend of the NASDAQ and Russell. Optimally, we'd like a dual dot confirmation of a trade, but we'll take one to get us a winner. And you can see, and this is taken right off the charts, we've got a dual confirmation short, no confirmation up, a dual dot confirmation down, and then a single dot confirmation long and up. Now, that you may think this is daunting and a little bit much, but I'm telling you, this is a real powerful way of trading the E-mini. And every market that we use, that we trade, has its correlative markets and allows us to create this dot system. And obviously, the 3-line indicator isn't as novel as this, but it does that multi-time frame assessment of the longer term time frames. Here's another trade. There's your short trade, no long trade, short, short. The dots lead the way, and they're going to give you the trades. Here's the dual dots again, short and long. Now let's add the dots in the 3-line indicator. Now you see the candle halo with the dot. Gives you a great entry here. You can't take a long trade. There's no 3-line on this roll, no trade. So here is the low risk, high reward entry. Here only. Sensors counter trend and no continuation short because you have no 3-line. Here's your long trade with the dots. Here's your short trade with dual dots. Here's your long trade with one set of dots. Up and up. Now here's the long trade, no short. Continue, no long here because the 3-line is not aligned. No short, no 3-line on entry. And there's your perfect long trade. And up you go. Now, if the 3-line changes and you lose it in the middle of a trade, you can stay in the trade as long as the dots stay green. The NASDAQ and the Russell are continuing to rise strongly. They may change color because of stochastic divergence. You stay in the trade. Now, finally, we use a money flow indicator. And it's optimized to determine money flow direction on that individual market. Each one has its own money flow determination. Now, this is the NASDAQ. I'm sorry, this is the E-mini. The middle line, there are 3 lines. The middle line is very specific for money flow direction on this market. And I will not take a trade without that middle line in my favor. Now we've got 3. It's called the major, the intermediate, and the minor. And they really accurately assess the movement of money by the big institutions from asset class to asset class. Now here you can see on a long trade, you've got that intermediate line. And here you see no alignment, total chop. And then the exponential oscillator gives you the entries. Now it's not absolutely required for an entry, but a signal does decrease risk. and points out a potential great trade. And here's an oscillator signal long. Here's an oscillator signal short. Here's a long, and here's a short. It's really an excellent way to assess a trade. And you get a signal every time our oscillator line crosses the 50. This is the 50 line. So here's putting it all together. You've got your oscillator signal, your dot, the middle line assessing money flow, and down you go. 85 ticks. Here's another trade. Here's short, oscillator signal, money flow is red, and down you go. This oscillator line long, no trade, because this is yellow. This signal, dot confirmed, green line, up you go. This money flow line, green, but you can't take it on a red. There's no trade. Here's your entry right here. When we go to a real chart, you'll see it's really pretty simple. Here's another one, 4 contracts, 3,860 bucks on this trade. This, you had all 3 money lines aligned. We call those triple quant lines. A dot entry with an oscillator signal, and all the way down it goes. These are the trades we want to catch. We want to avoid all the chop and the nonsense and the stuff that's going to get us potentially stopped out and set us back. Here's another move up and another move down. Now, I'm very hesitant to counter trend trade. I like to take trend trades. And then here's a full system trade. And this is what you're going to see when you look at the markets. So let me just show you. Well, I'll show you our offer in a minute. Let me actually take the slides off. Oops. Let me just exit. Now, exit the slides and show you the charts. Because anyone can show you anything on a JPEG. And let's take a look at the slides. Now, I'll show you this morning on the market. Now, I just want to caution you about one thing. This is NinjaTrader. We're active on 2 platforms, NinjaTrader and Sierra. The NinjaTrader code now a fractal indicator is any indicator that does a multi-time frame assessment. And when you close the charts and open the charts, it changes the color. And the reason is this: when you're trading, the fractal analysis, the way the platform does it, is it looks at the candle that's formed with the future candle that's forming. When you close and open the no, listen, I just did that in reverse. I'm sorry. When you are taking the analysis, you're looking at the candle and it's looking at the previous candle that's already formed. When you close it and open it, it looks at the candle and moves it to the forward candle. So it shifts the candle halo, it changes the dots a little bit, and changes the analysis of the 3 line. So if you want to do a look back at the end of day, you cannot close the platform. If you do, this is all going to change just a bit. But in general, you're usually going to remember it. Now, today, we took this long trade long right here. Now, we had our money flow. We had the first and second quant green. Now, this was surrounded by blue. And we had the dot. This is right at the open. And this is a 2 Uni-Renko. And this trade went I think it went 2 points. Went up 2 points, up 2.5 points. We had the dot confirmation. We had the order flow. Now, this is assessing today's open. This is assessing yesterday's close. This is assessing, these are pivots, and this yellow line is the VWAP, the value weighted average price. We try to never trade into that because it's a strong area of support and resistance. Then the market fell, and this is another entry signal. It's a very unique indicator. It's a continuation indicator. You don't see it often. But when you see it, it usually gives you a great entry. And this middle line was red, and we got this huge move down. Now you see you can't take any trade long. The dots prohibit you from doing that. We got this trade short because we had the dots, the 3 line, the candle surrounded by yellow, and in real time, we had that middle line red. We had no short here because we did not have the 3 line, we did not have the quant line, the middle line. This move up, we could not take. We did not take, I don't believe we got this trade short, but we got this trade short right here. Now, this 3 line analysis is wrong. This was yellow and not blue. We didn't get this long, but we got this short and we got that short. You can see we're eating this market alive. Down and down. And we quit. We hit our profit target and that was it. Now, if we traded on, we could have taken that as a continuation trade. There's our oscillator signal, and that's a gorgeous continuation trade. Dual dot confirmation. We've got all 3 order flow lines telling us money is coming in. Another confirmation for a continuation short. You see, we can't take it to counter trend because of the dots. Here we have no dot on the entry, so we have no trade. And now the move's getting extended, but there's our continuation signal. And we only need a point for our first target. We need 4 points for our last target. So we didn't get faked out at all. We're always trading in the right direction. And I'll show you crude. Now, crude did not give us a trade today. Now, crude, we want all 3 lines, money flow lines, in our direction. And we want both sets of dots because crude is very easy to get stopped out on chop. If you catch a trade, yesterday we caught 2 awesome trades at a crude inventory report. Today, there was no triple alignment, no dual dot entry. There just wasn't anything. This here, there's nothing. You see very few dots here. Nothing here. Here you have candles, and when you're in real chop, you're going to get candles of differing color. The short-term time frame and the longer-term time frame don't even align. And that's where you definitely don't even go near the trade. And you're just going up and down. Now, we were out of the market when this occurred. And I can't tell you if we would have gotten this entry. This is at 1348. And I don't know. Can't tell you. But we got nothing here. Now I can show you crude. Let me show you crude yesterday. And I'll show you the 2 great trades we got. Now look at these trades. When you get this dual dot confirmation on a continuation trade, you're going to get a winner. Now, I can't say 100% of the time, but it's very likely. And I'll show you the 2 trades right out of inventory report, right here. I took this trade short. It came here, and then it stopped us out here. And you see that wick allowed me to go right back in, and I took that trade down here. And all 3 of these lines were red. Red, red, red. So we got this entire move right out of inventory report at 10:31. And after that, again, we were done. Our profit target's between $400 and $500 for the day. If we hit it early, we close. Now, we have people in the room who make 2 or 3 grand. I only trade a small number of contracts, but I think part of trade management strategy is when you hit your profit target, you stand down. Because if you trade long enough, eventually a great trade will not work. 100% of the trades don't work. 80% of the trades work. And if you keep staying at the table and keep taking risk, eventually it's a statistical axiom that eventually a trade is going to fail, and it usually does when volume wanes. Now, I'll show you one other instrument, and then I'll show you the offer, and then I'll answer any questions. And I could show you any instrument here. Here's the Dow. Now remember, for every single market, you have a completely different set of dots and a completely different set of order flow metrics. Now we're only active right now on the Dow, crude, and the E-mini. Within a week to 10 days, we're going to be on the DAX, the NASDAQ, and gold. And then in about 10 days, we're going to be on the 6E, the 6C, and the 6A. So we're branching out slowly but surely. But this is the Dow. Now I think the Dow's choppy, and I find it difficult to trade, but a lot of people trade it. Now here's your perfect continuation trade. I don't know how the 3 line was, these money flow lines in real time, but here's your short. Now on this, it takes 40 ticks to get a full winner, and it's a 4 Uni-Renko. The settings are different here. Here the settings are 10, 4, 20. The others are 5, 2, 10, and we give you all those settings, and we set everything up. Now these are the trades that were damaging, and you get these on the Dow. Now the first target is 20 ticks. This one probably just made it. This one didn't. Here's a big winner right here. Here's a first target right here. Here's close to a second target. This is a 4 Uni-Renko. And then that's a beautiful trade. And that doesn't make it, I don't think. Whoops. I mean, we set really big targets on this. Here's a winner. Here's a winner. So I think the Dow is tougher to trade, but remember, it's only $5 a tick. And if you get 40 ticks, you make $520 on 4 contracts. If you lose the trade, the risk reward here is really good because you're not going to lose that much, and you're going to win a lot more than you lose on a trade. So the risk reward is skewed in your favor. Now I could show you any other market, but we don't have the quants, we don't have all the dots set up yet. These are the 3 right now, but we're going to be moving to multiple additional markets. I mean, if you really want to eat up the E-mini and to trade with a lot of certainty on crude, this system will do it for you. Crude, you just have to wait. And today, nothing occurred that was any good. There was no way to take a trade. Yesterday, we had great trades, and we had a big move right here. Hold on a second here, because I scale every trade. And I trade this myself every morning. This one went 27 ticks on crude. That is not a half bad trade. So let me show you the offer that we have. And I'm going to open this up again, so I'm going to have to scroll down to it real quickly. And then I'll answer any questions that you have. It's right here. Now the system is normally $3 grand, but we're offering it for $11.99, It's a lifetime license. Now, right now, it's active on. I want to know. I want you to know exactly what you're getting and what you're not getting. It's active on crude, the E-mini, and Dow. Eventually, it's going to be active on every instrument. It's all going to be active on stocks, and it trades the DAX, which is one of the next markets we're activating, and stocks amazingly well. I mean, the principles that we use are time frame independent and instrument independent. It doesn't make any difference what you're trading or what time frame you're trading. I trade a lot of options, and I have an options alert portfolio actually. And we made a lot of money today on options, believe it or not, even though the market took a real beating. So I have a spread on bonds, I have a spread on the Japanese yen, I have a spread on Huntington Ingersoll, which makes boats, which is defense. I pick them all using the system. Now everybody gets all the upgrades and add-ons for life. So if we make these markets better, we give them to you. Everybody gets a month in the training room. Everybody gets a 10-week 10 module educational training session. Look at it at your own speed. It's on video. And everybody gets access to our video tutorial library that has 450 videos in it. Now, the first 10 orders, now we don't intend to sell this again where we give out every market. We're going to sell these in batches of 3. But for the first 10, you will get every additional market as we roll it out. You're going to get the NASDAQ, gold, and DAX in 10 days. Very shortly after that, you're going to get the 6E, the 6C, and the 6A. We're going to move to Forex, and we are going to move to stocks. And we have everyone in the trading room that wants additional instruments, and we're going to roll them out on everything. And the offer expires on the 27th, which is Sunday night. But only the first 10 are going to get this. And we had over 100 people in the room. So let me see if there are any questions, and I will be happy to answer them. Okay, hang on. Larry, bonds and treasury notes are markets that we intend to move to in the future. Right now, they are not configured. Hey, good afternoon, Heinz. They're not configured. There will be a recording, Leanne. So you're just going to have to wait a little bit. But if you're one of these 10, you're going to get our bonds and our notes. And I can tell you, the bonds and notes chart is going to trade great. The dot system on bonds and notes is very powerful. It's just, you just have to wait for us to make that chart. We do have an auto trader, Larry, and it's doing amazingly well. We have it set up already. There's a central server that's in Chicago that sends out the signals. So it does auto trade. It's a completely separate system. I wasn't going to mention it, but since you asked me about it, it's not included here in this $11.99, but we have an auto trader system because the signals are so obvious. And the auto trader requires dual dots, requires the money flow line, requires everything that I told you we need to trade, it needs to trade. And it only takes the most conservative trades. The reversal on the candle is 12, is the 13th tick reverses the candle. If you want to trail the trade all the way, you need a 13 tick trailer. I don't give it 13 ticks. I just don't want to give it that room. The candle body is 7, so we give it 8. Now, if it pushes a wick through your stop, you can simply re-enter on the same candle. I didn't talk much about continuation trades, but if it pushes a big wick through your stop, just go right back in, and it's very successful. With NinjaTrader, if you get the full system, Larry, you get our trade entry system. I didn't talk about it, but the trade entry system we have allows you to sidestep the dome altogether. Now you can trade from the chart or the dome. I mean, we have chart trader displayed all the time. So it does not make any difference. You can do either one. Does it work on? Yes, it does, Celso. It absolutely does. It takes great trades. It takes them on a 10-4-20. We just don't have it configured yet for Forex, but eventually we will. It takes really good Forex trades. I would show you the Forex, but I have to take my data feeds down, put up my Forex data feed, reboot the whole system, and that takes about 5 to 7 minutes. But I'm telling you, it works good on Forex, really, really well. I do have a trading room, Larry. I'm in the room every morning. I trade this thing myself. We have 125 traders in the trading room, and we trade it every morning. That's one of the things you get if you come aboard. You come in that room and trade with me over my shoulder. And actually, we have a lot of people in the room that trade better than I do. By getting that look over my shoulder, almost all the trades that lose are due to my human error. Very rarely does the system give you a bad signal. I either miss a great trade or I jump at one that just doesn't have everything. I mean, the one thing I can't eliminate is human error. And every now and then I take a stinker of a trade, and 90% of the traders in the room don't take it. So it's very helpful to be in there and trade over my shoulder. Everything's on Chart Trader. As soon as I take a trade in the room, you see the stop, the targets, everything. And it projects the profit loss on every trade I take. We're incredibly transparent. And that's why we have traders who've been in this room for almost 4 years. Okay, John, I'm not trying to be evasive. I just can't put up the Forex now simply because of time. It would take me too much time to get them set up. And you have to believe me, it really trades good. Now, if it didn't, I would tell you to avoid the market. Believe me, I'm not here to sell you a system that is not going to make you money. I'll tell you right now. As far as tech support is concerned, we send you the zip file and we configure everything for you. Sergio's our tech guru here. He has a master's in computer science. He will get your entire workspace operational. Every time we send out an upgraded package, and we do a lot, like you're going to get an upgraded package for the NASDAQ, and then an upgraded for gold, and then for the DAX, and then for Forex, and then for stocks, and then for bonds, and for notes. Sergio will configure it for you, and he'll do everything for you on that end. You do not have to worry about that. Well, we do have support and resistance levels, John. If you remember, we have, and I'll just show you quickly, I'll just put this right over. We have pivots. We have the VWAP. And we have we have the open, and we have yesterday's close, and then we have the major swing pivots. Now, what we are going to be engaging very shortly is a really unique system that we have formatted that's going to predict for us the high of the market and the low of the market. And that's going to be a big additional innovation. So we're going to, when we start in the morning, we're going to have a high and a low prediction. And that's also going to give us a volatility metric. If the high and the low are huge, we know we can run our targets bigger. If they're tight, we'll know we're going to take profits sooner. gives us a better ability to milk the trades for as much money as we can. And everything is configured for you, including our trade management strategy. Sergio does everything. You tell him the number of contracts you want to trade. He will program that into your automatic trade management strategy tool. We will tell you our recommended targets and stops. You can, you don't have to take our recommendations. You can trade however you like, but we have everything pre-configured. I know everyone's looking for Forex. I wish I would have known. I would have formatted the Forex and had it up for you. I just can't do it. And again, it's not because I don't want to, really. I have FXCM as for my Forex. We should have the Forex ready, John. I'm going to be honest with you. It's going to take us about 3.5 weeks or so, because here's the two things that we want to do first. And this is just based upon what all the traders in the room are yakking about. They want the NASDAQ, they want the DAX, and they want gold. They want bonds and they want notes. And once we get those done, and those 5 markets are not that far off, then we're going to move and format our whole Forex space. So if you come aboard, you're going to get the whole Forex system. And I'm telling you, it really does work. It works just like this. If I hid this and told you this was, and said to you this was Forex, it trades exactly like the E-mini. It trades exactly like the Dow. It trades exactly like crude. Whoops, wrong chart. They all trade the same. And I'm serious when I tell you, this is market independent and time frame independent, and the Forex is no different. We have a dual dot system and money flow, and it's going to trade with as much precision. Our phone office number. We're at Eastern time, and our phone office number. Believe it or not, I don't dial myself very often. I'm going to have to put it up. Hold on a second here. It's 786-713-5276. And I can just leave that up for now. We're located in Florida. Let me get this crazy thing down here. That's it, John. I put it up. Thank you, Leanne. Again, John, within 30 days, probably closer to 3 weeks, we'll have the Forex markets up. If I knew there was going to be as much interest in Forex today, I would have projected the Forex instead of crude gold and instead of crude the NASDAQ, crude the E-mini, and have the YM charts and the NQ. I just didn't think it. Leanne, there's no plan on the crypto market. The reason is that the crypto market data that we get is still fairly primitive. I mean, I invest in cryptocurrency. I mean, I have Ethereum, I have Litecoin, I have Ripple, I have a few of the cryptos, and we have a cryptocurrency newsletter. But even that best trading platform, and I'm blocking on it. I look at it all the time. Just gives you very primitive indicator analysis, and it's not configurable. So we can't move this system to that charting platform. It's Coinigy. That's the really good charting platform for cryptos. Also, some of those small cryptos are very thinly traded, and when you move in and out, you're going to get an enormous amount of slippage. And remember, I don't think you can put stop limit orders in. I think that the trade configurations are fairly primitive. So you have to take a long-term trade and long-term investment, and that's what we're doing. I have a lot of people on my cryptocurrency newsletter, and I'm just very conservative. Right now, I'm just sitting with the big coins, and I don't yet see the role for some of these really smaller speculative coins. I look around all the time. Oh, I also have some. Oh, I've also recommended Omizi Go, which I really like. So that's the other cryptocurrency I have. Charlie, it does work on Sierra. What time? In the trading room, Julian, I trade the time frame I showed you. I'll show it to you right here. Let me knock out this website and take this out. On the E-mini and crude, I trade the 5-2-10 Uni-Renko. And we've done a lot of analysis. And everybody in the room always is suggesting different Uni-Renko settings, but I've not found one better than the 5-2-10. It gives us plenty of time to get in the trade. It creates a new candle every 2 ticks. And I like this speed. This is on a trend trade, this is a 7-tick candle body. On a reversal, it's a 5-tick candle body with a 7-tick wick. I really like the way it trades. You can speed it up. A 1 Uni-Renko is impossible because you're going to get a lot of slippage. You can make the candle body smaller. Instead of having a 5, you can have a 4 here. You're going to get a reversal quicker. The tick offset, if you make smaller, you're going to get a reversal quicker. But this is what I really like, and this is what I trade live myself. John, Sierra, and NinjaTrader. Sure, Larry, thank you. Have a great afternoon. Heinz, the NDT has not changed. We have modified it only so that it allows us to trade with Renko bars. When it was first made, it was only made to trade time, tick, and range. And Sergio had to do a lot of work on it to get it to recognize a Uni-Renko. It for some reason, when it was looking at them, they were invisible to it. Now it just trades the Uni-Renko, but the trade configurations are exactly the same. And I just have time to show them. I'll show them very, very quickly. If I go to strategies, here they are. I'm not going to turn them on, but these are our trading tools. And we can buy an up close, sell a down close. It's very, very easy. If we want to take this trade short, we want to take the trade 1 tick below the close of the candle. All we do is sell on down close, and that's it. Very, very simple to trade. And that's part of what you get. And that tool took us forever to make. And it's still, believe it or not, it's still patent pending. We turned in the initial patent 2 years ago. They kicked it back to us for a revision 6 months ago, and now they're reviewing it again. It's NinjaTrader. It works with Interactive Brokers, Glenn, because they provide us with, what happens is you need NinjaTrader, but Interactive Brokers provides you with an active data feed that allows you to run NinjaTrader. So you can run NinjaTrader right off of IB. They have their own brokerage, Paul. NinjaTrader use it. Now, if you want to, you can always trade a NinjaTrader demo, which costs you nothing, on a demo data feed, which works perfectly, and take the signals on the platform you're trading. I don't recommend it, but you can do it. And we have a lot of traders who do. They are wed to what they have. They don't want to flip. And we know our entry long before it hits. I call them out, even though I don't need to because of this tool, and they simply take the trade on the platform they're on. You can get NinjaTrader on a demo forever. You're going to have to renew the demo data feed every month, and you can't trade on the platform, but it creates a perfect chart, just as if you were live. So I mean, that's an alternative if you really like what you're trading and want to stay. It works. It'll be working on NinjaTrader 8 in a week, Celso. We're just about there. Right now it's 7, and we'll roll you to 8. It works on Sierra. We don't use the ABC anymore, Heinz, because we don't have any more engulfing candles. And this is a much, much more powerful system than the range. I still have the range here. I mean, after trading it for 5 years, I still like it. But this is the ABC, and it still gives us signals. But I'm telling you, you get much better signals on a Uni-Renko. And believe me, it was hard parting with this. It's like parting with a limb. I traded this for so long. But you just, you just get better trades, and you're able to stay in them longer, and you avoid all of the chop of a 5 and an 8 range. So I just got to go with what works, and it just does work better. Let me drop the NDTs. Thank you, John. We will, John. We're gonna do the FX. It's part of our program. We have a lot of traders, not just you, who want the FX. Believe me. We will, John. Gotcha. We'll review this transcript, John, and we'll get your email. Thank you, Leanne. Okay, John, about outlawing Bitcoin in Brazil. It's very possible. You know what, John? A lot of people, this is a little tangential, but John mentions how 16 countries may outlaw these cryptocurrencies. I have a lot of traders who subscribe to my newsletter, and I just haven't made very many recommendations in the last 6 months, and everybody wants a coin. They want a coin. And I've just been standing pat because I'm still concerned about the long-term validity of it as a trading tool. And I see Goldman Sachs and all these big investing houses that don't want to get involved with it. So right now it's very speculative, and I've held off on a whole bunch of recommendations because of that. Thank you so much, Charlie. I have no doubt of that, John said about cash. Okay, John, I'm going to have Rory go in and get your number. Okay? Right now, NT7 will be operational on 8 really shortly, Stephen. So if you can tolerate 7 for about a week, we'll roll you to 8. We're right there. Thank you, guys. Thank you so much, Michael. Okay, John, no problem. No, we've got support and resistance. The only thing that we removed is market profile, John. And the reason is, after doing a 2-year analysis, we found that the levels, I just don't see it has validity. I really like order flow analysis. I believe that has tremendous validity. But I don't see that value area high, value area low. I went to a really big conference this weekend with a lot of traders, a lot of companies. And I talked to a lot of people who trade. And there was one, I won't mention any names. He projects 10 points of control and 10 VWAPs, each one from the last 10 days. And he thinks that those 10 POCs and 10 VWAPs create validity, but I just see the market dancing through it. And so we've eliminated it. And I was crying a little bit because it took us weeks and weeks to program our market profile. And I don't think it's ever cost us a trade, but I think it would keep us out of real good trades if we brought it over. If you want it, I'll give it to you because it works on this charting system. I just don't think it's going to be of value for you. Thank you, Heinz. No, I agree, John. Nice. Thank you, Heinz. Thank you so much, Celso. Thank you, guys. Well, listen, thank you so much, everyone. Everyone have a really, really great afternoon. I hope to see you aboard. My goal is to make you money in the trading room every day. The first 10 we're going to be expanding the system across all these different markets, the Forex and stocks, and we're going to be adding a lot of different instruments here. Gold, the NQ, the FDAX, bonds, notes, and all of the currencies, the 6E, the 6A, the 6C. We're going to be adding them all. So everyone, I wish everyone the best of luck, no matter what you do. We're the small guy, and we got to carve out the money from the other small guys. We can't beat the institutional traders. But it's like if you ever watched YouTube and you saw Bug Wars. That's what it is. We got to take their money. Just call us, John, and we'll talk to you about that, or send us an email. Okay, John? Yes, John. Yes, Paul. I already use it to trade stocks and options. It's just not ready to send out to everybody yet on stocks. I want it perfect before I do it. It's really almost there for stocks. Like I look at it I look at the QQQ. I look at quite a bit of stocks on this platform already, but I just don't want to send it out to traders until it's perfect. And we just don't have it exactly the way we want it. We have to slow down some of the money flow lines, and I want to get the dot system perfect. And then we're close. Thank you, John. So we're right there. So listen, everyone, have a really, really great evening. The thing is, I could throw the stocks out to you. I could throw the Forex out to you. I really could, but it's not perfect, and I don't want to send you out anything that isn't going to work for you awesome. So I can oversell you, and I won't do it. When these systems are in a position to trade the way in a manner where I would trade them myself with my own money, that's when they're going to go out to you. And we're close. So I would rather tell you they're coming out in the future than throw them out now, and they're not going to trade with the kind of precision that I want. So, that's just my philosophy. So everybody have a really, really great evening, and I hope to see you aboard, because in all seriousness, we do make money almost every day in the live trading room, and I trade it live, and I project my profit and my loss. So take care and best of luck, and thank you for your time. Bye-bye all. And we will send a copy of the webinar. Bye-bye.